The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, the big $64 question that they fired away on me today was, why was I so bearish the crude oil? Folks, I wasn't bearish crude oil. All I said was it had a possibility of making some type of correction because there were a lot of things. If you'll take a look at this chart of the crude on the daily, you'll be able to see that we were right up at the 786. We'd been there for 4 days. I mean, that ought to be, number one thing to make a look at. But the other one, which was interesting, was, of course, if we looked at the heating oil, and here again, we had that old message from Dr. Andrew Lowe, non-random walk down Wall Street, that markets repeat, and they do it regularity. And as you can see here, the repetition we have in the cycles of that three drive, a triple top. Actually, it's not three drive to a top pattern. It's a triple top pattern, pretty much to the exact day. And then finally, of course, we wanted to look at the gasoline, and that was the one that, had been running the market for quite some time. And it had a very large ABCD 1.618 expansion that was coming up due right up here in the same area. You see within just a couple of cents. And, of course, we've had a pretty big correction. Now, let's just walk through the correction today, folks, because we were following crude from yesterday quite a bit because it had some really interesting patterns forming. And I wanted to show you the latest one was early this morning because we had made I'll get the whole trade set up here in just a second here, but you'll notice here that today we had this really strong rally here, folks. It's 382 rally, $2,000 right at the 382. Now we had sold the first 382 break, which was at 1951, and now we're trading at 12 something. But look what happened, folks. Those of you that have any question about ABCD, this is your last chance. Well, there's two other chances, but this is your last chance. Take a look at this, folks. Let me take a look at you won't believe this. I mean, I believe it. What am I talking about? God, I love this business so much. I don't understand why people don't see what I see, but who knows? Anyway, here is the ABCD, okay? As you can see up here was our sale point right up there. Right up there. There was a 382 at 1951. We came down, we rallied up, bada bing, bada boom. And then they gave us the ABCD price objective here at 1247. The low was 1231. And I sent out a special memo this morning that said, look, if you can sell it there, you got to be able to buy it there because that's a beautiful ABCD and it's sitting right on top of a 1.618 expansion number. Your risk there is very, very small. That one has already made $3,000 today. From the low, we went from 1247 all the way up to $16. I think we hit. So they don't always work like that, but by golly, you got to pay attention to them because when they do work, they work pretty doggone good. Now, here's another one. Now, this is one that, take a look at this. This was done a long time ago, earlier this morning, maybe 5-6 hours ago. All I did was go back to the old standard, AB equals CD, and this is one of the ones we like, the pork bellies of the futures market. That's natural gas. You'll see that the ABCD pattern measures to 8.003, folks. The high today was 8.020, $100 higher than the prediction, and it's already dropped $2,500 at the last time I had looked, and I guess it's still pretty much at that same level. So we got some big things happening here. Now, the reason why I talk about ABCD so much, folks, these markets are extremely volatile right now. And here is what was happening just a few hours ago. Let me get this up here. Actually, not even a few hours ago. It was only about an hour ago. I just go to a 4-minute chart because we got lots of things to swing with. So let's move over here and get this up here. What did I do wrong now? Well, I hope I'm pressing the right buttons. But here's the 4-minute chart on the Dow Jones. You see it rallies 250 points right at an ABCD pattern. And then, of course, it starts to break, really hard to the downside. Does that mean that it's over? No, but if you take a look at it on a bigger time frame, what you want to be able to do, since you're in a downtrend, folks, try to trade with the trend. Shut the front door and raise the vent. Doggone it. Just a minute. Can't press the right buttons to save my soul. Okay, here we go. Here's the longer term view on a 4-minute chart. All we're doing, look, when Mandelbrot did his work on fractals and Fibonacci stuff, all he did was say, look for the thunderbolt. That's the thunderbolt pattern right here. You see that ABCD? That means the trend is down in the Dow Jones until we get to this spot right here, and that'll be down about 900 or so. And remember, I said on Monday's show, we had our biggest day was 1,200 points to the upside in the Dow Jones, and the 1.618 expansion of that takes you to 2,000. So we're probably going to see on the downside sometime soon, if not, soon, sometime before the 24th of June, we're going to see a 2,000 point drop in the Dow Jones, maybe more, but that's just based on the 1.618 expansion. Remember, markets go down faster than they go up. They haven't scared anybody in the stock market yet. This has been the most orderly bear market that you could possibly see. I mean, my gosh, it's been doing the same thing every single day. I mean, there's nothing really dramatic about it, but that's what ABC does for you, folks. It tries to get you into those trades that when you do see them, it gives you a really good chance to, get on board and without risking very much. And that's what this whole game's about. It's about how much money you don't have to risk. That's the main thing. Hold on one second, dear. I have to take a small drink. Luckily, the Palo Verde season is over. We're going to have our first rainfall tomorrow. The monsoons start here on June 15th, and first one's due tomorrow. They last through September, about 3 days a week, sometimes every day. We get a real heavy rain in the afternoon, known as the monsoons, and boy, let me tell you, it is one wild one. When Mark Douglas moved here on April 16th of 1996, I couldn't even get into the house because the electricity was out. So I'm sitting in the driveway in front of the house waiting for the garage door opener to kick in. And I heard this crash and thunder and lightning. And I had the largest tree in the neighborhood in my front yard. And it split it in half. Half the tree fell into the street. The other half fell into my bedroom and bathroom, left a giant hole of about 3 feet. And it filled my house up with water. It had about 6 or 7 inches all over the house with water. Insurance took care of everything. I left the next morning, and they took care of everything. I went to California to visit my daughter, and so it was okay. Anyway, we'll be right back. 877-927-6648.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the 15-minute gold chart. And as you can see here, we've had some really nice ABCD patterns in here today. Big swings, 20 up, 20 down. These are really, really terrific swings that we're looking at when you stop and think of some of the moves we're having in all of these markets. Another very important thing happened today, folks. The Treasury bonds made a lower low by 1 tick. Now, I haven't checked. Let me do that right now. I haven't checked whether the Treasury notes did or not, because if they didn't, then that's going to tell us that there's a divergence going on. And boy, they didn't, folks. The Treasury notes have been higher now. This is the 3rd day in a row. Now, we made a lower low today in the bonds. So, and this market is extremely, extremely over sold, folks. And remember, we are sitting on the threshold of one of the largest ABCD patterns in bonds that we've had for, oh my goodness. Let's just get this bond chart up here so you folks can take a look at it here. You'll be able to see within 2 points of that darn thing. Hold on 1 second. We'll get it here for you. Hold on just a minute. Get this up here. Okay, there's our bond chart, the weekly going way back. You can see the 135 pattern we have here. That's when we got really bearish. Look, this big ABCD now. This was the 382. This is just like that crude oil chart we saw today, folks. This is right around 129 is the actual number because of the rollover of these contracts. But at 129, we've been to I think we hit 130 and change, and now we've had a little bit of rally. That, to me, that's close enough. And with everybody's on the one side of this trade, folks. So when we do get a rally in bonds, even though it's going to be a bear market rally, I think it'll scare the bejeebies out of these people that are short bonds. Just my 10 cents worth, and if you overpay, that's your own fault. By the way, Shane Smolian will be our guest today. Always interesting. He's got some good information on the Fed and also on gold. And I'd like to report now he's been 2 months into his automatic trading program, and he's up 5% a month. That's not so good because I think you can get 5% in a 2-year time period at a bank. So 5% a month, well, that's not too bad, I guess. If he does that, he's going to own the world in about 3.5 years. But we'll see how he does in the long run. But so far, he's doing incredibly well. But let's keep in mind, folks, this bond market is extremely, extremely oversold. It is in the news constantly, and it should be, because things have changed, folks. We are in a different era. We are now looking at markets that are going to go a lot lower. Some of them, look at lumber, dropped 60%, just over the past 6 or 8 weeks. So things are changing, and interest rates on your mortgages have doubled over the past 2 months. I mean, so these things are telling us that things are a little bit different. And yet they're still the same. The markets are still going to trade the same, except their volatility is most probably going to increase. That's how I see it, just looking at some of these things that I'm paying so close attention to. And I missed a few things, folks. I mean, I talk to tell people get ready to buy these grains and stuff, and yet when it comes time to it, I ended up focusing on the things that pay us the most money, which is crude oil, gold, the stock indices, and bonds, being right on those. And that helps a little bit. But you can't get them all. But we're going to get some of them, that's for sure. That's the one thing that we feel pretty confident about. Now, here's something I wanted to bring to your attention here. Talking about overnight markets, I wanted to because there's such great volatility here, and opportunity comes volatility. The Chinese, the words opportunity and risk in the Chinese language are spelled exactly the same. Opportunity and risk are spelled exactly the same. Like if you're in the English language and you want to spell cat, C-A-T, well, you spell it twice. Once for opportunity and once for risk. It depends on how it's used in the sentence. Now look at this pattern right here. You can see the first 382 retracement here on the left. I marked that in blue with that big down moving angle, right? Bada bing, bada boom. Then you come down, and then you make an ABC, and what does it do? It makes the 382 off the higher level. What this is doing is exactly what Mandelbrot talked about and what we talk about in the Floor Trader's Handbook. These patterns repeat with such regularity that it's just unbelievable. I mean, do they do it every single time? No, but they do it enough to tell you that, by golly, this is one heck of a good edge, and that's what we're really looking at, is to try to find an edge that works. Now, if you'll look at that chart really closely, you'll see up on the right-hand side up there, that the one we were watching for today was 37.43. We only got to 37.23, folks. Then we went down and made new lows down below 36.70. Now, once you've done that, you have to recalculate the 382s, because these charts are dynamic, folks. They're not static. They're dynamic. They're shaking and baking. So you've got to be able to get in there and change your mind if you see something really dramatic happening. And that's really all you can do. Let me ask someone. I had 3 different emails from people that belong to the 24/7 group and the students and stuff, asked me, because we had done so well on the short side of the crude oil market, and say, isn't that a bullish pattern? And I wrote there, I put objective, as you can see right there. The objective was 112.47. The low was 112.31. Yes, that was it. And I said, if you can't go long there, you can't go long anywhere, because you're in a big bull market, and all you'd had is a nice 3-day correction. When we sold that thing way back up here, I wasn't looking for that thing to go to $90 a barrel. No, I was just waiting for the next pattern to unfold to see if it was going to do what I thought it was going to do. Does that work that way all the time? Heck no. Probably half the time or 60% of the time. But that's the advantage that you have. You get to play in that ballpark to tell you that, yeah, I know what my risk is here. But look at these. I mean, 382 right here, another 382 right here, and then bada bing, bada boom, you come right down here, and it rallies all the way back up to 116 already, and that's it. By the way, that if you were looking at that natural gas, it's already dropped 40 handles from the 801 level, folks. So that thing is certainly in vogue today. And I didn't do one contract of the natural gas, folks. I was busy doing something else while I was in crude. But anyway, that's you can't do them all. When I'm looking at these things, I come in here trying to find 3 or 4 trades a day that pop up really nice. One that looked really good today was a potential buy in the soybeans. That's worked a little bit. I missed that one. I didn't get filled. The crude oil had my interest. That was doing. The S&P did well. And, of course, we did really well on the gold contract. So those are just the ones that we try to line up. And, I knew from 1982 that I could beat this game. I knew from that time, I knew I could do it. And I've been doing okay since that time. Do I make money every day? No. Make more money on days than I lose. That's basically what I try to do. But not every day, is a winning day. And it shouldn't be. You can't. We got Shane Smolian coming up at the break here in just a few minutes. So make sure you treat him very, very nicely, because this boy is going to be very famous. 877-927-6648. Billy Ray Valentine, Capricorn.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolian, the wolftrader.com, on the line. Shane, are you there?
Is this Duke and Duke?
You got it, brother. 100 South Broad Street, Philadelphia, Pennsylvania. Say, my friend, I have a question for one of our listeners, and that is, has the Fed lost control of the markets?
Well, I'll get into that.
Okay,
there are some very interesting things happening right now, actually, in the last day, which I'll cover, that have transpired. So have they lost control? Well, the way that I look at this, guys, is you have to understand that, I'll put this in a sports analogy. Your team's playing. Your team it's halftime. It's the third quarter. Your team's up by 3 touchdowns. They start putting in the second, the third, and the fourth string players. The Fed's put in their fourth string players right now. They're not even trying. So to say they've lost control, I don't know if that's an accurate statement because they're not really trying. So this is completely caused. They're causing this. So it's not like they're trying and they're losing. They're just putting the fourth string players in. I guess if that's my best analogy.
Sounds good to me. Continue, my friend. Would like to hear what you have to say.
All right, so we're going to talk briefly about S&P 500 today, pretty briefly, and I'm going to go into gold again. I talked last Saturday about the Saturn Cycle, which is also bearish, and then just for everybody to know, there's not going to be a webinar this Saturday. It's not going to be a webinar this Saturday, but we'll have one the following week, just so you know. Okay, S&P 500. So this is the chart of what we've been seeing intraday. These are the speed lines here, the Fibonacci speed lines. And you can see each time this has rallied up, it's collapsed, which I call these the poop slinging rallies, when they're just throwing something out there to see if it'll stick. Now, we had this relatively stronger run up here. It was retraced very quickly. There is one thing here that is sticking out to me in terms of something that doesn't look right, which is there's a gap here, guys. There's a gap from last Friday to this Sunday, and I think this is going to close at some point here. I know the S&P looks pretty dire right now, but I do think there is a chance at least that this is going to try to come back up and fill that gap at some point. Now, Bitcoin, this is another one. Fed just finally went into a buy yesterday, just so people know this on Bitcoin. It is coming down to this 20,000 level into here. Now, here's the thing. 20,000 is a level that a lot of people talk about as, they said this when it was at 30,000. I'm going to come in and buy it at 20. I'm going to come in and buy it at 20. So is that true? Yeah, it's probably true, but there are some larger issues here where, people are saying that MicroStrategy, the average value of their Bitcoin is around 21,000. So there's a strange thing here that, while this should be support, if you start getting large liquidations of Bitcoin by larger whales and institutions, then that could actually be a vacuum, and then that could cause it to really start to go into free fall after that. But I think it's going to hold here, at least for the first bounce. I like the fact that the Fed just got back into a buy here. That's a very positive sign for Bitcoin. But this is the wild card, and this is the Fed doesn't have any control over this. So Bitcoin's been dragging the S&P down too. So if Bitcoin can recover here, the S&P could take a little pause here. Now, let's talk about something else here. European Central Bank to create new tool to address fragmentation risk and temper the bond rout. Now, they were very vague in the language of this, but essentially what they're trying to do is they're trying to keep the interest rates in different countries from rising at different rates. Okay, so it's more expensive to borrow in Greece than it is in Germany, or just as a comparison. So this is a kind of it's not really. It's not. Yeah. Sure.
Shane, we've got a caller on the line.
Sure.
Could you ask your question to Mr. Smolian, please? Shane, we have a caller, so go ahead, please.
Hi. I was tuned into your conversation there. I called about crude oil. I'm not able to listen to the program live, but because my work and so forth. But I was curious, Shane, about crude oil, and are you seeing this thing backing off substantially? And I'm not sure if you guys discussed this yet, but
no, we have not.
Just curious your thoughts.
Okay, I'll give you some. I should do a webinar on crude oil. Crude oil. Okay, so we've got this Ukraine thing going on, which is, of course, is causing huge oil issues. Natural gas too. But I'm looking at some of these larger term cycles. There's a couple of peaks here. I think end of July is the kind of a peaking zone for oil. Then it comes back, and then at next February, I think that's going to be a significant high in oil. So I think peak in the end of July, maybe a pullback, and then peak again into February, because everybody's got to remember there's, when we talk about inflation, one of the big things that people aren't considering is that we are just 3 months away from the fall. And that means that Europe's going to get cold, and Europe's going to need natural gas. They're going to need oil. And so I think you're going to get a second push higher as we get into the fall and the winter on a lot of these resources. And so I think like February 15th, somewhere into there, I think that's a high on oil, like longer term projections. So
Great. If I may, Shane, are you seeing the same kind of thing with grains and softs, that kind of thing?
I haven't looked at specific cycle high dates in those, but that's much more dependent upon fundamentals right now, because Ukraine could miss up to 3 planting seasons, they said. So it's going to depend a lot more on Russia. I see the grain staying elevated, definitely food shortages, things like that. I can't see. I would think the grains would be one of the last things to come down. Oil could be stubborn. Natural gas looks like it's going to be up there too for a while. So.
Okay. I really appreciate it. Thank you.
You're
Thanks
welcome.
for calling in. Well, that puts you off your usual game. You never talked about crude oil before, so you did a good job. Go ahead. Please continue.
Yeah, we're working on it. Each Saturday we're covering a different market. I'm getting some longer-term perspectives. But, crude oil's got those 2 highs coming in, like I said, end of July. And a lot of that has to do with the chart. It's about the futures chart is 9 degrees of Aries, and then Jupiter's in Aries right now. So it's going to come up to 9 degrees, back off, and then come zooming past 9 degrees next February. So that's why I kind of threw that out there, but it's not a detailed deep dive into that. Okay, so European Central Bank. So what this is kind of like a stealth QE. They're doing different measures to address, they're trying to bring the fragmentation down. Obviously, buying the bond would do it, but they're trying to extend the rates at which they can reinvest, and they're kind of poking around. So in the July meeting, they'll give a firmer stance on this. So they're already starting to look into QE stuff here with this. So it's a stealth QE ultimately. Now, here's another one that was really strange. S&P's coming down here, right? And the Fed all of a sudden just blasts the juice on this thing for 3 days and essentially halts the rally. Now, today we're going back down again. But this was very interesting that they did this. Now, they can't do it with the sustained measures now because they're cutting the balance sheet off. But they essentially halted this rally. I mean, it was like a Jedi mind trick or something. I mean, I was looking at this and I was like, what are they doing? And so they essentially halted it. Now, we are down a little bit today, but there's stuff going on here, guys, in the background with the ECB and what's going on here with these internals. Now, here's another thing to add to the confusion. Yesterday was a geomagnetic storm. We know that these are negative for the markets. So you had like this tug of war going on between the Fed, who was really slamming it in to try to stop the decline, and then this geomagnetic storm, which is negative. I think that's what we're feeling today. The geomagnetic storm is kind of pulling us back down, but it is clearing up now. So I think that there's a chance here that we could be making a short-term low, and we're going to try to come back up to that gap. It just really bothers me when I see a gap on a chart like this. These things, they don't tend to stay like that, particularly on a major futures market. So just something to think about.
Hey, stay with us, Shane. We got to pay a few bills. 877-927-6648. Shane Smolian, thewolftrader.com.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're talking with Shane Smolian, thewolftrader.com. You want to continue, Shane?
Sure. And I just want to make one more comment about oil. So we're into the summer months now, and there's this little thing that happens called hurricanes in the summer, and they come up through the Gulf. And when that happens, they shut down all the refineries and all the oil rigs, and oil spikes. So I think that's a hidden inflationary pressure that could be coming on gasoline too. And then, the PPP, guys, that's the new norm. So, when if we go into recession, they're going to do it again, and that's going to be inflationary again. So the inflationary pressure is likely here for a while. Okay, so Saturn cycle, let's talk about this. So we were talking about gold last week. What I'm starting to do is to put these cycles in like waves. I'm starting to count these waves. Now, they're not Elliott waves. I know Elliott waves want to make everything 5 and 3-wave retracements. This is just as it traces out with the Saturn cycle. So we can identify major peaks and troughs. So this is gold here. So gold has 6 waves in the Saturn cycle. So I always make the first bullish wave 1, 2, 3, 4, 5, 6. And so that's kind of how it looks. Now, I talked before about the fact that gold is viewed by many people as old yeller, like this old reliable, it's my best friend, it's just going to go higher, I just need to hold it, and everything's going to be okay, and bake a cake and eat some cupcakes too. But I just want to point out that gold goes into these horrible bear markets, and they can last for two decades at a time. That we've seen this during the 1980s, 2000. So the question is, does gold just have to go up because we're in some type of a crisis? I don't think necessarily it does. I mean, if you look at this Saturn cycle here, some of these, this is going back to the 1920s, but you can see during this first decline here, the Saturn cycle traces this out, and then during the 4th to 5th wave is the biggest run here in this 1920 to 1930, and then here comes Cujo. Gold's not our friend anymore here all of a sudden, right? Gold is collapsing here, losing a good chunk of its value here. Now, what I want to do is I want to go to some more modern times here. So let's go to, this is going to go from 1940s to 1970s. Gold barely moves here, but this isn't in real terms. But you can see here there's this big run here at the end of 1970, which is coinciding with that first wave. So that was the start of the bull market where gold was our friend here. But if we get into the 1970s through 2000, what we see here is that after that first leg here, wave 2 is down, and then this third wave comes up into 1980. That's the peak here. And then it starts to come down, and we get this really big bear market here in gold. But the Saturn cycle still traces this out. Now, the one thing I want to point out to everybody is, since we're able to count this now, I'm progressing. Maybe next week we'll do some ABCs. But this is easier for us to see, right? So you got wave 5 here, wave 5 here. This last wave on Saturn cycle here, it lasts for about 8 years or so, 7 to 8 years. And so You can see back here in 2000, this was the low here into wave 6, and then we started the big bull run up here in gold after that wave 6. So that's when it starts, when we hit that 2000 low into there. So I'm going to show you where we are now. And keep in mind, guys, what I'm trying to do here, when I put these charts up, I'm building a case, essentially. I'm building a case that essentially is just showing you that, this is what I see with the cycles, etc. So let me see if I can actually play this here to make this bigger on the screen. Hopefully that's big enough so everybody can see it. Okay. Can you guys see that? Larry, can you see that?
Yeah.
Okay. All right. So what does this mean? Well, essentially what this means is that we're at the top of this 5th wave right here. Okay. So gold, according to this cycle, is at a peak. Now, I looked at the divergence chart. The divergence chart showed gold at a peak. I looked at the Jupiter cycle. Jupiter cycle shows gold at a peak. This particular wave here, like I said, this one can last up to 8 years. So I have 3 strong pieces of evidence here building the case here that gold is likely headed lower. Gold is likely at its inflationary peak here. And if you take a look here at our friend here, Cujo, for those of you who don't remember Cujo, it was a movie in the 80s, a Stephen King novel about a dog that gets rabies and starts attacking people and terrorizing a woman and a kid in a car. But essentially, gold can become not so friendly here going into the next few years. Now, I don't know if it's going to go this long. I mean, this is a long time to go. I had others. This one is showing it bottoming in about 2028, somewhere into there. I had other cycles that show it bottoming from 2024 to 2025. But the bottom line is, when you get cycles that all agree like this, there's a good chance it's going to manifest. It's going to play out. I'm going to take maybe one more look at gold from a different perspective. But 3 of these now that are saying the same thing, I think there's a good chance the gold run is over. And the warning sign, of course, was when we had this 40-year inflation and gold is declining. And so what that's telling me, that's a negative divergence, that gold is likely ready to start falling. And again, I gave a target down here of somewhere between 950 to 1100 on gold. And I think there's a good chance, if you kind of take the midpoint into there, I think 1,000 is a nice round number for that. And then the good news is for the gold bugs is once we get down to this level, I think this 1,000 level, we will be at the end of this cycle and we will be at the start of a new bull run. So the new bull run will likely start around 1,000 on gold, somewhere down into there. And then that first wave can be a screamer. So that's the point to where I would expect gold to start to make its run higher here. At that point.
If you see gold at $1,000, boy, you're going to see some people that are going to be like the Bitcoin people.
Well, yeah, that's a different story. I mean, Bitcoin's in trouble. Yeah. The thing about Bitcoin is that the Fed's not there bailing out Bitcoin. So people.
Really?
Tell people,
you don't think so? Oh, okay.
No, they don't care. I mean, think about it. Look, Bitcoin is the mistress, right? That's what I tell people all the time. They cheated on the U.S. dollar. Okay, why would they try to bail out Bitcoin? They're going to let it fail. Now, I think it will survive, but it's gonna get pretty bad, I think, for Bitcoin. Gold's a different story. Gold comes down. Gold's less volatile. But I still think that, it could decline, 30, 40, 50% still. Nothing like Bitcoin, though. Bitcoin is in much more severe, is in dire straits at this point. So.
Wow. Yeah, it's really interesting. Holy cow. Okay, now you're not going to do a video this weekend, right?
No, I'm going on a business trip this weekend, and I'll be back Sunday. So we'll be doing the webinar on the Zoom webinar that we do to talk about the auto trading. Okay. But this week we're taking a break, so sorry guys. I'll have a webinar in 2 weeks or a week from this Saturday. Yeah. So.
Okay, listen. Tell the folks how they can reach you if they have an interest.
Absolutely. Let me come down here. I just have a lot to talk about here, but. If you guys want to reach me, you can reach me, Shane at wolftraderfutures.com. This is my email here. We do have the website is wolftraderfutures.com. So it's wolftrader and then the word futures after it.com, and then www.fedjuice.com. The YouTube channel is Wolf Trader Futures. That's where we do the webinars, and I try to do one a week on a different topic. We'll probably get into oil in the next few weeks. I do think oil, though, is looking at a peak somewhere into that late July period and then again into February. Twitter, WolfTrader FUTU1. You can reach us there. You can follow us on the Twitter. And be happy to chat with you.
Thank you, my friend. We'll have you on again soon, and be safe on your travels, okay?
Thanks so much. Take care, everybody.
WolfTrader.com, folks. Shane Smolian. We'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Well, folks, with a great deal of excitement, we still have Shane Smolian on the line today. Continue, my friend. Sorry to cut you off, but I thought you were in a hurry. So go ahead. Whoops, looks like he was in a hurry. Okay, I'm going to post something, folks, for you to take a look at. You can, we talk about these things all the time. Sometimes they work, sometimes they don't. But if you get up here in this chart, 1 second, I will get this and show you. This is what I look at each day as I'm watching. We always talk about the 382 retracement. There was the buy down here, folks. That was a big ABCD down there at 1241, and low was 1231, I believe. And we've now touched this high up here. We've made a double top up in here in the crude oil. But this move right here off the 382, folks, was $1,300. I mean, that's equivalent to 30 handles in the S&P, and it did it in about 10 minutes. So this thing really rocks and rolls as it goes along the way. So I think it's important that you got to remember, boy, these things, when they work really great. On a trade like this, if you were to buy it at the 382, you have to put your stop just a little below the 50% level. We don't risk even all the way down to the 60 because it's got to hit one of these two numbers if it's really bullish. And so far, it has been. Now, You're not going to get every tick or anything, but what it does try to do is give you a really good chance of coming in and making a trade that looks like it has a good probability of working, where the odds in your favor are better than 3 to 1. And also, the payoff is better than 3 to 1, and the odds of winning on that trade is better than 62%. That's what this whole thing is about when you're dealing with the principles that are in the Floor Trader's Handbook. So I think it's important. Remember, by the way, today something very important happened in the Russell, folks. We're down 2 standard deviations. So pay attention to today's low, because if it can hold, this is where the rally could start from. Because the Russell, for some reason, it's the second largest of the open interest, S&P first, then Russell, then NASDAQ, and then Dow Jones. So that Russell hitting second standard deviation, very, very important. I want to thank Mr. Billy V down in Texas for bringing that to our attention. So that is very important. We'll see you on the flip side tomorrow. Our guest will be Tim Boss, Financial Cycles Weekly. May God bless.